Welcome to the Deep Dive. We sift through the research, the articles, all the expert insights, really, to bring you the knowledge that matters distilled down. Today, we're diving into something that, well, feels like the holy grail for a lot of us, financial freedom. And we've found some really eye-opening material that's just a different path, one centered around what sounds almost too simple, a $5 daily habit. So our mission today is to really unpack this core idea we found. It's not how much you earn, it's what you do with just $5 a day.
Yeah, the concept that probably makes you pause a bit, doesn't it? Because we're so often told that, building real wealth needs a huge salary or maybe getting lucky, some kind of secret strategy.
Exactly, something exclusive.
Right. But what's fascinating in the sources we looked at is this much more accessible path. It's built on consistent, almost tiny actions. We're going to dig into the psychology, the practical strategies, how this small habit can actually be, well, transformative for your finances.
Right. So let's just tackle a big money myth straight away. For so long, I think many of us have felt that, real wealth, that's for the six-figure crowd, the lottery winners, maybe venture capitalists. It just seems out of reach.
A distant fantasy, yeah.
Right. For the average person just trying to get by. But the material we've reviewed argues pretty strongly against that. The counter-narrative is actually quite freeing. Wealth, it says, is built in small, consistent steps.
And that's relatable, isn't it?
Totally. Think about it, $5. Most of us probably spend that, maybe even more, without a second thought. That coffee you grab, a quick snack, scrolling Amazon late at night and hidden by, poof, gone.
That $5 just vanishes.
Yeah.
And what's really compelling here is shifting from that, that mindless spend to intentionally using that same $5, turning it into a daily habit. When you make that shift, that's when you start to unlock the secret of compound growth.
Compound growth, okay.
And it's not just theory. The numbers, they tell an amazing story. Let's take an example from the research. Say you invest just $5 a day. That's what, $150 a month? Put it into something like a broad index fund, maybe aiming for that historical average, like 10% return.
Okay.
After 30 years, just 3 decades, you'd be looking at over $300,000.
Wow. Hold on. $300,000 from $5 a day. That's substantial.
It's a staggering number, right?
Yeah.
Especially starting so small.
But okay, I have to ask, because I know listeners are thinking this too. That 10% return year after year for 30 years. How realistic is that? What about market crashes, bad years?
That's a really, really good question. And it's critical. The sources are clear. Historical averages are just guides. There are no guarantees in investing, and markets absolutely go up and down. Volatility is a part of the deal. That 10%, it's a long-term average used to illustrate the power of compounding. It's not a promise for every single year.
Okay, so it's about the principle.
Exactly. What the research hammers home is that consistency and time in the market are way more important than trying to time the market or chase some unrealistic high return. Even if your average ends up being, say, 7% or 8%, the principle holds. The final number will still be significant because you kept putting the money to work.
Right.
It's about sticking with it, letting time do the heavy lifting, not panicking during the dips, trusting the long-term strategy.
That makes a lot more sense. It reinforces that idea that starting earlier just makes the numbers, well, get even crazier, as one article put it. It's that exponential growth, that snowball effect, that makes this small daily thing so powerful down the road. Now, I can hear some people listening maybe thinking, $5. Seriously, that's nothing. I've got huge goals, mortgage, retirement, kids' education. $5 feels like a drop in the ocean.
Yeah, it can feel almost insulting.
Totally, I get that reaction. But this is where it gets really interesting, because that view kind of misses the point. The real power isn't just about the $5 itself, it's deeper. It's about the habit loop you're creating.
Ah, the habit loop, yes.
One source called the $5 habit training wheels for financial freedom. I love that analogy. It's about building that financial muscle, not just the immediate cash.
Precisely. And that psychological principle. It's fundamental to everything we've looked at. One key source stated it plainly. Habits are what separate the wealthy from the broke. It's not the big flashy wins, it's the small, consistent things you do every day.
Like brushing your teeth.
Kinda, yeah. By consistently saving or investing that $5, you're actively training your brain for discipline. You build that loop, the cue, maybe seeing the notification, the routine, the automatic transfer, the reward, seeing the balance tick up, even slightly, it reinforces the behavior.
Okay.
Once that $5 habit is locked in, becomes automatic, that's when you've built the foundation to scale it up. Because think about it. As one expert noted, if you can't manage $5 responsibly, consistently, how likely are you to handle $500 well?
Good point. It's foundational.
Exactly. It builds the mental infrastructure, makes bigger savings feel less daunting later on.
So, okay, if it's about the habit, the brain training, how do we actually do it? How do we start today? Because that's the practical question, right?
Yeah.
And our sources give some really clear, actionable strategies. They outline, I think it was 4 key areas.
That's right. 4 practical pathways. First up, micro-investing apps. Think platforms like Acorns, Robinhood, Fidelity Go. These have made investing so much more accessible.
Lowered the barrier.
Massively.
Yeah.
You can set them up to round up spare change, or, more to our point, set up a recurring $5 daily deposit into things like ETFs or index funds.
And ETFs, just quickly, those are like baskets of stocks or bonds.
Exactly. Exchange-traded funds. They trade like stocks, but give you diversification, often tracking a whole market index. Super simple way to get broad exposure. And the research shows people get a real psychological boost seeing even small amounts grow. It demystifies investing.
Okay, so micro-investing is one. What else?
Second, automatic savings transfers. This is dead simple. Just tell your bank, move $5 a day from checking to a separate high-yield savings account. You'll barely notice it, is what the experts say.
Out of sight, out of mind.
Right. But at the end of the year, that's nearly $2,000 saved, almost passively. Financial advisors love this because it removes the daily decision.
Makes sense. Number 3.
Debt pay down, especially high-interest stuff like credit cards. Putting an extra $5 a day towards that debt, that's $150 a month more. It makes a huge difference. We saw examples, like on a $5,000 balance at 20% interest. Making minimum payments takes forever, costs a fortune in interest.
Oh yeah, I know that pain.
But adding that extra $150 a month, it could shave years off the repayment time and save you thousands in interest. It's a direct path to freeing up cash flow.
Wow. Okay, that's powerful. And the last one.
Number 4 is skill building, investing in yourself. Instead of, another impulse buy, use that $5 a day for a book in your field, part of an online course, maybe data analysis, digital marketing, something in demand, or even a productivity tool.
Investing in your earning potential.
Exactly. As one expert put it, knowledge compounds just like money. It can open doors to higher income, new opportunities, and the great thing is, you don't have to pick just one. Start where it makes the most sense for you right now. Debt killing you. Start there. Eager to invest. Go that route. Need new skills. Focus there.
Love it.
The key across all of them, the absolute key, the source is stress, is consistency. Just keep showing up.
Okay, that flexibility is really helpful. Now, let's touch on something. The latte effect. That advice to skip the latte to save money. Some people, myself included, sometimes kind of roll their eyes at that. It feels a bit preachy.
It can definitely come across that way, like you have to give up all small joys.
Right. And let's be clear, this deep dive, it's not saying give up your coffee if you genuinely love it and it brings you joy. That's not the point. For me, maybe it's not lattes, but I know I've dropped $5 on some random app I used once, or an in-game purchase, or just some shiny thing online I forgot about instantly.
We all have those little leaks.
Yeah.
And connecting this back, the whole point isn't really about the coffee itself. The latte effect isn't about coffee. It's about awareness. It's about recognizing that every dollar, even the small ones, represents a choice. And often those $5 choices are just automatic.
Mindless spending.
Exactly. So becoming more aware and consciously redirecting even a small part of that spending towards your goals, that's how you start stacking the odds in your favor. One study we saw mentioned how surprised people were when they actually tracked those little micro spends. They added up to hundreds a month, often unnoticed. It's about being mindful, aligning your spending with what you actually want long-term. And honestly, redirecting $5 a day, it's not going to ruin your current lifestyle. You won't feel deprived. But according to all our sources, it will fundamentally change your future.
Absolutely. Okay, I want you to just picture this for a second. Imagine it's 20 years from now. You log into your investment app or check that savings account you set up, and you see a serious number there. 6 figures, maybe more. Money that grew while you slept, while you lived your life, all because you made that tiny, consistent decision every single day to set aside $5. That's not a pipe dream. That's the reality this habit can build.
And that vision, that really captures the core difference the sources talk about. The difference between feeling stuck financially and actively building freedom. It just hammers home that truth again. It's not about luck, it's about habits. Your financial future isn't random. It's the direct result of the small, disciplined actions you take starting now.
So what does this mean for your very next step? We've unpacked the why and the how, the compounding power, the psychology, the practical options. Now here's the challenge for you, starting today. Commit to your $5 habit. Pick one. Micro-investing, auto savings, extra debt payments, skill building. Just choose one and set it up. Automate it. Make it happen.
Yeah, take that first step, and as you do, hold on to this final thought. This isn't really about the $5, not fundamentally. It's about proving to yourself, day in, day out, that you can show up for your future self. That consistency, that disciplined action, that is the real engine of change. That's what unlocks a financial future you might have thought was impossible.